Welcome back to the Deep Dive. This week we're diving into the world of startup funding.
Startup funding. Always an exciting space.
It is. It's like peering into the future, seeing which companies are attracting those early investments that can really make or break a company.
Absolutely, those early stages are crucial.
And we're focusing on two sectors in particular this week: environmental tech and enterprise software.
Two areas ripe with innovation right now. Lots to unpack there.
Definitely. And to guide our deep dive, we're tapping into a unique source, a recruiting firm's blog.
A recruiting firm. That's not your typical Wall Street Journal, is it?
Not at all. But that's what makes this so interesting. It's called Bearhug Recruiting, and they specialize in placing top talent in these sectors.
So they need to be in the know, right?
Exactly. To attract the best they need to have their fingers on the pulse of the industry, and that includes knowing which companies are attracting the big bucks.
Smart. So they're practically incentivized to offer some really insightful analysis?
Right. It's like getting a sneak peek into the minds of investors through a recruiter's lens. We're looking at funding data from July 8th and 15th, 2024.
Okay, so let's get into it. What did Bearhug unearth in early July?
Well, July 8th kicked off with a company called Uncaged Innovations.
Uncaged Innovations, I've heard of them. They're tackling leather alternatives, aren't they?
They are, but here's the twist: they're making it from grains.
From grains. That's fascinating. I read something about their process, biofuse, I think they call it.
That's the one. And it seems investors are impressed. They snagged $5.6 million in seed funding.
Not bad. That's a pretty decent seed round.
It is. And what I found really interesting was the diversity of investors who jumped on board. We're talking Green Circle Capital partners who focus on sustainable investments, Fall Line Capital, known for their ag tech investments.
Interesting mix. Clearly, they're tapping into something that resonates across different sectors.
And even Jaguar Land Rover, the luxury car manufacturer, they dip their toes in as well.
Wow, really? That's a pretty big name to have on board, especially at such an early stage. Makes you wonder if they're looking at this as a potential source for their car interiors down the line.
It's like a stamp of approval from a luxury brand saying, hey, this sustainable alternative is the real deal.
Exactly. That kind of endorsement can be huge for a company like Uncaged Innovations.
Next up on our July 8th funding recap is Phaedra. They're using AI to optimize energy use, specifically in data center.
Data centers. Now, that's a space that's just exploding right now.
It is. Think streaming services, online gaming, all that data storage and processing. It's only going to require more and more energy in the future.
Absolutely. And energy efficiency is always a hot topic, but using AI to optimize energy consumption in real time, that's pretty cutting edge.
It is. And their approach is attracting attention. They secured $12 million in funding led by Index Ventures.
Index Ventures. They've got a knack for picking winners.
Yeah.
That says a lot right there.
It does. Now, the blog also mentioned two other companies, Pieces and Protea. However, they're focused on areas outside of our main interest for this deep dive: developer tools and AI infrastructure. So we'll keep moving.
Makes sense. Focus is key.
Back to our main storyline. July 8th also saw Vita securing funding. They're bringing AI to customer service with their unique voice-based solutions.
Conversational AI. That whole field is really heating up. And they managed to capture the attention of Stillmark, a big player in the AI space, even with a relatively small seed round of $3 million.
Stillmark doesn't invest in just anyone. They must see something special in Vita's technology, even at this early stage. It's like spotting a potential unicorn,
Exactly. And last but certainly not least, on our July 8th funding roundup, we have Tembo.
Tembo. Now, what do they do again? Refresh my memory.
They're tackling the world of open source databases, specifically Postgres. Their goal is to make it easier for companies of all sizes to use.
Postgres, that's a powerhouse in the open source world. Robust, but it can be a beast to manage at scale. That's where Tembo comes in. And investors are taking notice. They just secured a cool $14 million in Series A funding.
Series A. So they've moved beyond the initial proving ground. Sounds like they're gearing up for some serious growth. Who are the investors on that one? Anyone notable?
Definitely. The round was backed by Great Point Ventures and Venrock.
Now, those are some heavy hitters in the B2B software world.
Their financial backing is as solid as their Postgres knowledge. July 8th was a whirlwind of investment activity, with each company showcasing some serious innovation.
It sounds like it. But we still have July 15th to uncover. Any other groundbreaking discoveries that week?
Well, the 15th is a bit of a head-scratcher.
Head-scratcher. Now you've got me intrigued. What do you mean?
Well, the 15th looks a little different in our source material. Or rather, it doesn't appear at all. There's no recap for that week.
Really? That's odd. Bearhug usually seems pretty on top of these things.
Exactly. They're usually meticulous about tracking these funding rounds, which leads me to believe that there simply weren't any deals that week that fit their criteria.
So no early stage or growth stage companies in environmental tech or enterprise software announced funding rounds that week. Huh, that's pretty interesting, actually.
Exactly. And while it might seem like a minor detail, I think this absence of data tells us something.
It's like that saying, right? The absence of evidence is not the evidence of absence.
Precisely. So instead of glossing over this quiet week, I think it's worth considering what this funding gap might indicate.
Okay, I like where you're going with this. Is this a blip on the radar or a sign of something more? What are your thoughts?
Well, one possibility is that we're witnessing a subtle shift in investor focus within these sectors. Maybe, instead of broad solutions, investors are becoming more interested in specialized subsectors.
That makes sense. As these fields mature, we'd expect to see a move away from the initial land grab phase towards a more discerning approach. It's like the difference between investing in the internet in the 90s and investing in a very specific type of online platform or service today.
Exactly. Or this lull could indicate that investors are increasingly drawn to later stage companies. Instead of placing early bets, they might be shifting their attention to companies that are closer to profitability.
Ah, yes, the siren song of a potential IPO. Always tempting for investors seeking those big returns. So it's not necessarily that funding is drying up, but rather that it's flowing towards companies further along in their journey, companies that have moved past the prove-it stage and are now in the scale-it stage.
It's a fascinating possibility. This could also point to a growing interest in alternative funding models beyond traditional venture capital. Things like venture debt, which functions more like a loan, or revenue-based financing, where repayment is tied directly to a company's revenue.
That's a great point. These alternative models can be very attractive to certain types of businesses, especially those with strong revenue streams, but who might not fit the mold of a typical high-growth, venture-backed startup.
So this quiet week might actually reflect a diversification of the funding landscape, which could be a sign of a healthy and maturing ecosystem.
Exactly. More options for companies seeking funding, more opportunities for investors with different risk appetites. It's a win-win situation.
This has been a great discussion on the potential implications of our missing data. But before we spiral too far down the speculation rabbit hole, let's bring it back to the companies we did discuss. From a purely analytical standpoint, what are some common challenges these companies might face as they grow? What should our listeners be keeping an eye on?
That's a great question. And you're right, securing funding is just the first hurdle. One major challenge, especially in the environmental tech space, is scalability. It's one thing to have a groundbreaking idea or a working prototype. It's another entirely to ramp up production to meet market demand while maintaining those eco-friendly practices.
Finding that balance between innovation, sustainability, and commercial viability, that's no easy feat.
Precisely. Take uncaged innovations, for example. Their grain-based leather is fascinating, but can they produce it in the quantities needed by a company like, say, Jaguar Land Rover, while keeping costs competitive? That's a critical question they'll need to answer.
And beyond production, there's also the regulatory landscape to navigate. Environmental regulations can vary widely from country to country. Companies operating in this space need to be nimble and adaptable to meet different standards and requirements as they expand globally.
Absolutely. And we can't forget the ever-present challenge of talent acquisition and retention. These companies are pushing technological boundaries, and they need skilled, passionate people to drive that progress. Competition for top engineers, scientists, and developers, especially in specialized fields like AI and sustainable engineering, is fierce.
It's like having a high-performance race car, but no qualified driver to take the wheel. Funding and vision are crucial, but without the right people to execute, it's just potential energy, not kinetic.
Exactly. So as we track these companies, it's crucial to look beyond the headline-grabbing funding announcements and consider these operational challenges.
So what should our listeners look for as indicators of these startups' potential for long-term success? What separates those who ride the wave from those who get swept away?
Well, one key indicator is their ability to secure strategic partnerships. Collaboration is key, especially in emerging fields. Partnerships with established players can provide access to new markets, manufacturing capabilities, or even just lend credibility and trust to a young company.
Uncaged Innovation's partnership with Jaguar Land Rover is a perfect example of that. That single deal could be a game changer for them.
Exactly. Another crucial indicator is their ability to demonstrate tangible impact. Are they delivering on their environmental promises? Are they publishing data to support their claims? Transparency and accountability are going to be paramount in these sectors, where the line between genuine progress and greenwashing can be blurry.
Consumers, especially younger generations, are increasingly savvy about these issues. They're looking for concrete action, not just marketing buzzwords.
And finally, keep an eye on their ability to adapt and evolve. The tech world is notoriously fast-paced. Companies that can pivot, iterate, and anticipate industry shifts are the ones most likely to thrive in the long run.
So, agility and a constant willingness to learn and adapt, even if it means throwing out the old playbook, that's what separates the startups from the stay-ups.
I like that. I have to borrow that one.
Feel free. Now, before we wrap up our deep dive into these funding waters, I have one last question for you. If you were to put on your investor hat for a moment, which of these companies or sectors would you be most excited about right now?
Oh, that's like asking a parent to pick their favorite child.
Yeah.
They're all so promising in their own right. But if I had to choose, I'd say the field of AI-driven energy optimization, like what Phaedra's doing, holds immense potential.
Really? What excites you about that particular area?
Well, consider this.
Hmm?
Our world is becoming increasingly data-driven. Everything from streaming our favorite shows to powering our smart homes requires massive amounts of energy. Data centers, in particular, are becoming energy hogs. Finding ways to make them more efficient is critical, not just from an environmental standpoint, but also an economic one.
So it's a rare convergence of doing good and doing well for investors.
Exactly. And Phaedra's approach, using AI to analyze and optimize energy consumption in real time, is potentially game-changing. The more data centers they can optimize, the bigger the collective impact on energy usage.
It's like they're finding hidden efficiencies that we didn't even know existed.
Exactly. And the fact that they're operating a sector with such a large and growing energy footprint makes them incredibly compelling, both from an investment and an impact perspective. But of course, this is just one perspective, one lens through which to view these exciting developments.
Of course. There's no crystal ball in investing, and that's part of what makes it so interesting.
Absolutely. It's all about informed speculation, recognizing potential, and sometimes taking a leap of faith.
It really is, isn't it? That gut feeling can be powerful. And speaking of gut feelings, you mentioned earlier that you were intrigued by the lack of funding announcements on July 15th. What if we dig into that a bit further? What could that silence tell us about the bigger picture?
Ooh, I like where you're going with this. Sometimes the things that don't happen are just as telling as the things that do.
Exactly. We already touched on the possibility of investors shifting towards more specialized subsectors or later stage companies, but maybe it goes even deeper than that.
Okay, I'm all ears. Lay it on me.
What if this quiet week reflects a broader shift in how we think about innovation and sustainability? Like maybe it signals a move away from solely focusing on purely technological solutions to environmental challenges.
Interesting. You're thinking more holistically, more systemically.
Exactly. Maybe investors are looking at the bigger picture now, considering factors beyond just the next big gadget. What if they're looking for companies that are not only developing innovative technologies, but also rethinking their entire approach, their business models, their supply chains, even consumer behavior?
It's about moving beyond incremental improvements and really pushing for those truly sustainable practices, right?
Right. It's about acknowledging that true sustainability isn't just about doing less harm. It's about creating systems that are regenerative and beneficial in the long term.
And that requires a huge shift in perspective, not just from investors, but from entrepreneurs, policymakers, and consumers alike.
It's a massive conversation, and to be honest, one that we could spend an entire deep dive unpacking.
Absolutely. But for now, it's a really thought-provoking note to end on. This quiet week in funding might actually be a subtle sign that the conversation around innovation and sustainability is evolving.
It's like a gentle nudge to remind us that sometimes the most significant shifts happen beneath the surface, in those quiet moments when we pause and reevaluate.
It's not always about the big splashy headlines.
Exactly. So for all our listeners out there, keep your ears to the ground and your minds open. The world of startup funding is just one piece of a much larger puzzle.
And who knows, maybe one of you listening will be the one to shake things up, to challenge the status quo, and redefine what it means to build a truly sustainable future.
Now, that's a call to action. And on that inspiring note, we'll wrap up this deep dive into the world of startup funding. We've explored the latest investments, analyzed the trends, and even dared to imagine a future where innovation and sustainability walk hand in hand.
It's been a pleasure diving deep with you today.
The pleasure was all mine. And to all our listeners, thank you for joining us on this journey. Until next time, keep asking those tough questions, keep exploring those uncharted waters, and keep diving deeper.